house prices are going to crash. We've got a lot of people that are prepared to go as far as going on strike. Why? What could be more important than to think about how do we grow and protect our wealth? They can't do that this time. We've got negative unemployment. Teachers on strike, rail workers on strike. We've got nurses, we've got doctors. I'm not totally crazy. My logic is this. I've been a property investor for 40 years. I've seen all this before, and the combination of circumstances. Hello there, and welcome to this week's edition of Money Matters, because as you know, I deeply believe that money matters. And as we go into 2023, what could be more important than to think about how do we grow and protect our wealth over the next 12 months? All of the experts are saying house prices are going to crash. All of the newspapers are printing headlines like house prices set to crash 20%. So let's have a look at that. Let's have a look behind the numbers and let's actually understand what's really going on. Where I want to start is headlines like this. You can see that we're set for a winter of discontent. We've got a lot of people that are prepared to go as far as going on strike. Why? Simple. They're being offered pay rises that are lower than inflation. Normally, when this happens in recession, employers, they're not too bothered because some people might leave, but they can recruit other people. They can't do that this time. We've got negative unemployment. We've got like 2 vacancies for every person. So if somebody wants to move to get more money, no problem at all. But if you want to artificially hold down the rate of increase that you give somebody, they're just going to go. So we've got teachers on strike, rail workers on strike. We've got nurses, we've got doctors, we've got huge amounts of people on strike. And in fact, look at this headline here. Currys just sacked the post office. Why? Because it's critical for them to be able to get all the parcels to all the people whenever they need them. Obviously, they're an electrical retailer, but the post office keeps going on strike. So it's not that they don't like Postman Pat, they love Postman Pat. But what they just gave to their own employees is a 16% pay rise. And over the last 5 years, they just gave them 40%. So with pay rises like that going on, at or above the rate of inflation, everybody should be able to, as long as they get a pay rise like that, everybody should be able to cope with the increase in bills, and it will put up the price of everything. This is called an inflationary spiral. Wages go up, prices go up, wages go up, prices go up. And what do you think is going to happen to house prices in that context? So that's the first thing that I want you to be thinking about. Normal people will have more money and they expect things to be more expensive. Why should houses be any different? So that's thing number one. So the second thing, classic supply and demand. The population of the United Kingdom has actually gone up by more than 8 million people since the turn of the century. So in the last 20 odd years, more than 8 million people. That's roughly the population of London. So imagine a city the size of London just being dropped on the UK, apart from, oops, we haven't built enough houses. In fact, we're building roughly 50% of the houses that we need to keep pace with demand. So the price of everything's going up, wages are going up, we got a load extra people and far too few houses. Okay, so the third thing that I want to talk to you about is the cost of money, the price of money, generally referred to as the interest rate or the mortgage rate. Look here at this chart. This chart shows the last roughly 40 years while I've been a property investor. For the first decade, price of a mortgage was somewhere between 12, 15, 16%. In 1986, that's taking you back a bit, isn't it? I bought a bungalow. I had that bungalow for 42 weeks. How do I know? Simple. I sold the bungalow after 42 weeks for £42,000 more than I paid for it. Think about that. I only paid £78,000 for it. So it went up by more than 50% in 42 weeks. My salary at the time was around about £15,000. So I was earning way more than 3 times from the property than I was earning from my work. So let's just stop and think about this. My bungalow went up by more than 50% in 42 weeks, while interest rates were at 14, 15%, mortgage interest rates. Mortgage interest rates are nowhere near that at the moment. But is inflation and high interest necessarily bad for house prices? No, I've seen all this before. Go and have a look at what happened to property prices in the 1980s. During my career as a property investor, that's the highest rate of increase that I've ever seen. Are we heading back towards that perfect storm? Because people that weren't in the market missed out big time. Very often, one house was earning loads more than they were in their day job. So here's another question for you. Point number 4, can you actually afford to do the job that you're doing? Because if the job that you're doing stops you getting involved in property, that might not be the right decision for you. Time out. I just want to share with you a little snippet about me and about you becoming wealthy through property. I left home at the age of 17 with £170 in my pocket. 40 years later, I live here in Monaco. How did I do that? I became wealthy through property. I wrote down that knowledge, that experience, because I wanted you to have exactly what I had. Because I want you to become wealthy through property too. So please click the link below, get a copy of this book, and now let's get back to the video. Number 5, I brought you down here today on a rainy day in Monaco. That's right, you heard me. Sometimes it rains even here in Monaco. So the atmosphere, the environment, people talking about recession can have a negative impact on investment sentiment. It really can. So wherever you live, however you live, sometimes the middle of the darkest part of the year, you know, December, January, can pull everybody down a bit. So I just want you to think about, well, if not property, then what? You're going to put your money into stocks and shares? Well, they've already lost 25 to 35% last year. Some shares have tanked. Some companies have completely gone bust. How about crypto? Not so much for most people. Gold, okay, gold will probably hold its value, but is it actually going to give you any rent? Is it going to give you any income on a monthly basis? No. So when you compare property against all the other asset classes, even if it did drop by 5% or 10% during 2023, but you didn't sell it and you kept on making a profit from your rent, is that actually a problem? Does anyone watching this video, please put a comment down below if anyone watching this video genuinely thinks that in 10 or 20 or 30 years time, property prices won't be a lot higher than they are now. Over a 40-year horizon, you probably heard me say this before, the first property I ever bought, 269A Roman Road, I paid £9,000 for it. That same property is now worth more than £400,000. So over a 30, 40-year timescale, it really doesn't matter what happens next year. It honestly doesn't. So let's move on to number 6. The Bank of England has openly said it can't put interest rates up to more than 5.25%. Why not? Well, let's have a look at this. Look at this chart over here. This chart shows you the cost of debt repayments, the interest payments that the UK government has to make on the national debt. Generally, look at this chart, they've been £3-4 billion a month for the last 20, 30 years. That's a very typical payment. June 2021, they spiked at £9 billion. That's something like 3 times the normal level. June 2022, they were more than £19 billion. The government literally can't afford to put up interest rates. Why? Because the cost of government borrowing, some of it is linked to the interest rate and some of it's linked to the inflation rate. So they're getting absolutely killed every which way at the moment. The cost of government debt is going crazy. And if you think, oh, well, you know, if they put the interest rate up too high, maybe I'll get my house repossessed. No. A long time before you get your house repossessed, the Houses of Parliament will get repossessed. The UK will be bust. It will be broke. So let's wrap this up and bring it home. House prices to crash in 2023. Well, call me controversial, call me what you want. I don't think they will crash. Might they flatten out a little bit for a few months before they take off again? Yes, that could happen. But even if that happens, even if there's a 5 or 10% correction, I don't care. I'm going to still go and buy millions and millions, tens of millions of pounds worth of UK property in 2023. So that's number 1. Number 2, why? I'm not totally crazy. My logic is this. I've been a property investor for 40 years. I've seen all this before. And the combination of circumstances, population growth, not enough houses, cheap money, government can't put up the cost of borrowing too much more because they're going to go bust. I've seen that. I've seen this combination of circumstances before in the 1980s. Don't miss out. Make sure you got your finger on the pulse. Make sure you do everything you possibly can to get invested in property or increase your investment in property, but do it sensibly. I want to invite you to come along, and I want you to learn with us. I want you to study with us for a couple of days, because I think the best way you can get crash started on your property journey really fast, not a property crash, but crash start your property journey, that's what I think you need to do. Come along, join us 2 days at Wealth Through Property. Click the link below, and I look forward to seeing you online, and I look forward to seeing you become wealthy through property in 2023 and beyond. I've been Paul Smith, Touch Education. You've been wonderful. I'll see you at Wealth Through Property.